In terms of this shelter-in-place payback that you've announced to start off the week, to pay back some of these or return some of these auto insurance premiums to customers, how did you arrive at that $600 million number, and what does that mean for Allstate customers that are going to start receiving these checks?
Well, what it means is we're going to treat them fairly. So when you look at what's happened in driving, so we kind of began the month in March, and everybody was driving about the same amount they did. And then you got to the third week of the month, and boom, it went down. Went down almost doubled every day until it's down between 35 and 50% by state. And so as a result of that, of course, you're having fewer accidents. And so what we concluded was, in catastrophes, and we've been in this business a long time, you got to act quickly and you got to put people first. So based on 1 week's worth of data, we said, let's go. Less than 2 weeks later, we have a plan in place to give everybody back who's an auto insurance customer 15% of their premiums in April and May, and they can have it in their credit card, they can put it in their checking account. And so we've worked to give them money back because they really need it at this point in time.
Yeah. You're also doing payment relief, free identity protection, which really got my attention. What are you seeing that prompted Allstate to offer free identity protection, to offer a service like this to your customers through the rest of the year?
Well, when you look at, our lives have become very virtual, whether you're a third grader going to school online or you're working from home, we've all moved into the digital world. And as a result of that, hacking opportunities are up. And so if you look at the coronavirus phishing attempts, it's up 600% right now. And so we thought, people are more at risk. And so let's just give them free identity protection. We sell it to customers. We sell it at the work site. But we're making it available to all U.S. residents. And Morgan, free is free. Like, we don't get you to sign up, and then if you forget, we keep billing you. In this case, we've said it's free for the rest of the year. Come to our website, sign up, and we'll help protect you. Of course, we hope over time that some people will find value in it. But we really did it because we believe being in good hands means protecting people. And we all have to buddy up and do this together in this crisis.
Yeah. Insurance companies like yours, some of the biggest, most advanced repositories of data and data analysis. What does the information, whether it's in autos, whether it's in identity protection, whether it's in homeowners, all of these different areas that you cover, what is it signaling about how this outbreak is evolving right now? And how does that compare with some of the other disasters, catastrophes that we've seen in past decades?
Well, it's a really good question. Of course, unlike we've been in catastrophe business for almost 90 years, whether that's tornadoes, earthquakes, wildfires, this one, of course, those are much more concentrated. And this one has a longer period of time. So the data is a little different here. And so what we do know is that people stopped driving pretty much on their own. So even when you look at shelter-in-place rules versus non-shelter-in-place states, driving still went down a lot because people drive to go to work about a third of the time. A third of the time is for errands, and a third of the time is to see friends. So at least 2 of those got cut back substantially as a result of this. And so what you've seen is driving go down precipitously. We access driving data on 23 million cars a day, and you can see it everywhere. And so people are driving less. Interestingly, the people who are still driving are driving a little faster. Maybe that's because nobody's there, but we don't know whether they will have more accidents. What we don't know is what will happen when we come out of this. We don't know whether people will decide, I kind of like working at home for a couple of days a week, still want to go to the office, so will driving be down 2/5 instead of 5/5? We don't know on that part of the driving yet, but what we do know is that if we treat our customers fairly, we'll get through it together.
Tom, good to see you. It's John Ford. I got a question about claims overall. With more people home, we've heard that crime has been down. I imagine other types of claims might have been affected too, maybe personal articles, less personal loss. Is there any type of claim that you're seeing that's up at this time, or generally are people being less risky and are you seeing fewer claims?
Well, John, you were going into the homeowners space. The data on that's not conclusive yet as to whether there'll be more or less thefts as a result of people being at home, because as some people are home, they're also getting their families together. So some places are completely empty. And so you don't find out about those claims until people go back. So if somebody comes from their child, goes to their parents' house and their apartment gets broken into, they won't know for a month. So really too hard to tell yet on the homeowner side. We do know in the auto side that there are a lot less accidents, and there will be a lot less accidents as long as we stay off the road. That's obviously has a benefit, and that's what we're trying to get back to our customers.
Hey, Tom, it's Carl. Two questions. One is, what do you say to customers who are asking their own insurers, Geico, State Farm, Progressive, if they're going to match the move that you announced yesterday? And number two, you guys must be doing some long-term modeling on auto ownership. As you said, if people realize they can work from home, what does that do to demand the number of vehicles per household in this country over the long term?
Well, on the first one, I think every company's got to treat their customers the way they want. Obviously, I would say if you call and you're not happy, you can call us. Be happy to have you talk to us. But as it relates to the long-term trend on cars, there will be fewer cars used. If you look at the amount of money we spend on personal transportation in the United States, it's about $4 trillion of hardware and about $2 trillion a year. And we use that even at peak hours only about a third of the time. So we've been investing in things like telematics, car sharing, to help people figure out how do we bring that cost down for our customers. Obviously, as we bring down those number of cars, then there'll be less need for auto insurance. So that's why we've been expanding into things like identity protection and product protection. We insure cell phones and computers and stuff like that. So as a company, we think our goal is to help protect people. If they got cars, we'll protect them. Our cars, if it's their cell phone or their identity, we'll protect them there. But there will be a long-term trend. Whether this will accelerate it or not, I'm not sure. But certainly the world is going to be different.